Good day, fellow investors. I just made a video on Netflix and then the news came out that Bill Ackman from Pershing Square Holdings sold his stake. In his quick letter to shareholders, he says how they sold their investment in Netflix purchased earlier this year. They took a 400 million loss, and then he explains that they have high regard for the management and that it is a remarkable company with great operating leverage, good business model, but that the changes in the company's future subscriber growth can have an outsized impact on our estimate of intrinsic value. In our original analysis, we viewed this operating leverage favorably due to our long-term growth expectations for the company. Yesterday, in response to continuing disappointing customer subscriber growth, Netflix announced that it would modify its subscription-only model to be more aggressive. And Bill Ackman says that it could do really well, but it is extremely difficult to predict the impact on the company's long-term subscriber growth, future revenues, operating margins, and capital intensity. With difficult to predict, with higher uncertainty than what Bill requires, he sold the stake because we have lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty. Based on the management's track record, we would not be surprised to see Netflix continue to be a highly successful company and an excellent investment from its current market value. That said, we believe the dispersion of outcomes has widened to a sufficiently large extent that it is challenging for the company to meet our requirements for a core holding. And then, learning from past mistakes, act promptly when we discover new information about an investment that is inconsistent with our original thesis. And of course, key reason here why he sold, there is maybe some other opportunity that looks much better, much tempting, and therefore Netflix, when compared to other opportunities, the risk and reward doesn't fit his portfolio anymore. My take on Bill Ackman selling is, okay, the most important thing is that he found something better. So he took a 400 million loss to maybe get better risk and reward elsewhere. As he says, there are better opportunities. The second thing that, of course, he will not tell it in a letter, but it could be typical Bill, is that he talked to the management after taking a stake and the management didn't listen to him. Then he gets pissed and he drops the stock. That's typical Bill, and that could be very well the reason for him selling it. Also, I don't think that the business is any different than it was 3 days ago. We all knew the market was saturated. We all knew that the accounts were there, that we all give the passwords to others. That's nothing new. If he watched my video, he would have known that 2 months ago. So that's nothing new there. So Netflix still has 200 million subscribers, still making money, still doing well, still offering a lot of potential. So I think this could be the right one. And then, of course, we'll never know the truth because it will not come out. But when it comes to investing in Netflix, I really think that it is about how it fits you, not Sven, not Bill, not Warren. So the opportunity of a good business at a good price might be there, but also you don't have to rush anywhere. You have the time to learn, to get to that high degree of certainty and to buy if it fits you. And then, of course, you have to compare the risk and reward to the price. Investing is all about the price. Will Netflix disappear in 2, 3, 4 years? Unlikely, because the subscribers are pretty loyal. Now, check the video I made before knowing that Bill Ackman sold. So this is just an update where we discuss Wall Street stake, we discuss the earnings update, what's going on, and how to approach this from an investing perspective.